And I think entrepreneurship is if you don't realize that, if you're building a company and you don't understand that there are so many people intertwined with your business, it's your team, it's your partners, it's your shareholders. It's stupid to think that you're independent because you're an entrepreneur. People become an entrepreneur to be independent, but you're not.
This is Making Progress. Today I'm joined by Bob Jansen. Bob, welcome.
Thank you.
Can you please introduce yourself?
Yeah, I'm Bob, founder of Firmhouse, entrepreneur here in Rotterdam, and we're an e-commerce platform for recurring commerce.
All right. Can you explain or elaborate a little bit more what an e-commerce platform for recurring commerce does?
Yeah.
Like what problem you solve?
Yeah, so we help brands provide their physical products on a recurring basis. So we help Bolt King offer their products on subscription. So all the subscriptions of Bolt King run on our platform. So you could compare us, functionally you could compare us to Shopify, but then for anything that you want to do on a subscription basis.
All right, awesome. So how do you, Bob, set goals for your business or your private life?
Well, for my private life, I'm not much of a goal setter, so to say. Like I think it applies for me mostly to business. Before, even talking about setting goals, what I've learned is that it's really important to understand what your compass is. Yeah. So it's all about values. Like what am I building? What matters in what I'm building? And goals actually come from the direction you want to set for yourself. So I'm pretty much more focused on principles and values rather than having I want to grow towards this level. Obviously, there is an ambition, a strong and a big ambition to become really big, to make an impact. But it's really important to first take a step back and understand, which direction am I pointing my company, my people, my team into, and where do they need to perform, and where do we need to go?
Makes sense. Do you have any specific ways to do that?
To zoom out and discover values.
Yeah.
Well, I think for any entrepreneur, it should always start with understanding why you want to start a business. If you have no clue on why you want to become an entrepreneur, become a founder of something, it's really hard to just start the journey and start running, because when the journey gets hard, then you probably, how they say in Dutch, you say, dan kom je jezelf tegen. So it's you will meet yourself on your journey and figure out why am I doing this? And only then you ask yourself your question, and maybe you have already started something, you have investors, you have people in your team, you have customers. If you ask the question during the journey, then I typically find it's a bit harder to answer it. And it can emerge, during the harder times maybe when you have a business, but it's best to really start it at the start. So what I did, obviously I started the business quite early on during my studies, so it's already 17 years in. And throughout the journey, we have 3 chapters. And then, every time when we figured, we're on a path that, we enjoy, but it's not really the destination where we're headed towards, the course correct. And the way I zoom out for myself is that I ask myself, if 20 years from now, the business is either very successful or it has failed or it's nice, but somewhere in between. What do I want to other people to talk about of what I've done? Not so much in praising, but more I know Bob for having achieved this or having made an impact here. And if you start asking yourselves those questions, it becomes quite much easier to sort of reverse engineer where you think it's important to go to.
Yeah,
I know the direction is.
Yeah, and I know you for the past 12, 13 years.
Yeah,
a bit.
13. Yeah,
and I would say Bob and Firmhouse have always supported entrepreneurs and now companies in either validating or setting up new business models.
Yeah,
right. That's a bit like what I know you from, but that's not really 100% what you do anymore. So, and you just mentioned you have three chapters.
Chapters, yeah.
Could you briefly highlight those 3, with the
summary? So the first chapter really started during our studies. So me and Michiel then already joined forces. He's a CTO, Chief Product CTO of Firmhouse. So back then we already had the idea of turning our own ideas into little products that we wanted to launch. First thing was built on Twitter, and then we sold that. And then afterwards we figured, hey, it's really nice to turn an idea into a prototype, launch it, see if it gets traction, and go from there. So basically we rolled into first really technical focus, building products. So you could call that sort of the transition into chapter 2, building products and prototypes. And then later on we added, and that's also how we know each other, more like the innovation coaching, innovation consulting, whatever you want to call it. I don't like those words, but like really helping companies to even get to ideas that they can test in the market, and then also building the products for it. And that's, I think, a chapter that we have been on until 2018. And then we figured, okay, we really need to get back to building our own things. And then as part of the journey of being an agency, we rolled into subscriptions. So we both didn't have a commerce background, but we really rolled into subscriptions together with a customer who wanted to have a simple tool to offer a physical product to consumers in the market. That was Philips. And with that, at some point, their agency budget was out, and we said, well, you're going to be the launching customer. We're going to build this into an e-commerce platform. So that's how we arrived at where we are today, together with like new investors. We really focused on making sure that we're no longer an agency, and we really turned into a scalable product, a platform. But it's really interesting. You also mentioned the help entrepreneurs test new ideas, because there is a big similarity what we do with the platform today, which is really helping brands to start or scale subscription offerings in the market and deal with all the complexities that come with it. But now we're much more from a technical standpoint and not from an advising standpoint. So now we build the foundation, the technology where brands can do that.
Yeah.
So there is like from a value perspective, what I mentioned in the beginning, like building your compass, that's still a big part of what we do today, is that we are actually helping people be successful in business. But now we do it with what really is our DNA, which is building technology and putting that in the market.
And also still like new business models, right? And innovation pretty much.
Yeah, but I think that's maybe a few % of the outcome of what we deliver. To many entrepreneurs, it's probably new, but it's not as open and as innovative as we have done before.
No, sure, but like the entire product as a service business model is maybe not brand new,
right,
but it's still for a lot of companies who are transitioning with a product that they sell for one time.
Yeah, from one time to a lifetime.
To a lifetime, or to at least to a subscription is completely different, and they have to adopt.
Yeah, true. So we do have companies that, for example, sell bikes, e-bikes, but then also start renting them out. What we've learned, though, is that it's really, and I mean, we've spoken about this a lot when we were doing the innovation consulting still, it's really hard to change companies, especially when they're a bit bigger. So it's really hard to even do that with the technology that we have today. So when customers come to us and really, are exploring transitioning into product as a service, most often they fail because it requires such a big change inside the business. It's not only the technology that they need, it's like finance. There's so many aspects to it.
Yeah.
So my sort of like comparison is, imagine you have built a business, or you have scaled a business to a couple of hundred people, and then changing it from selling a product to renting out a product. It's like it's like taking a chainsaw and just ripping everything apart, and that's really hard to do. It takes a lot of effort, takes a lot of capital, takes a lot of convincing inside the business. So typically for that kind of business model, we're more interested in working with smaller companies who start with it, rather than big companies coming to us and then saying like, we're going to do it. Because we know after a year or 2 years or 3 years, it's not big enough and they will kill it again.
Less effort, less risk.
Yeah, exactly. And it's better to start it from the ground, because you can design a new business from zero into serving a rental or product as service offering. And typically those are much more successful.
Yeah. And because an existing company might also not do a bilateral approach, because they will be afraid that it will like cannibalize the core business, right? Or
exactly, it will. Yes, you have especially a lot of that, because you're not convincing somebody to spend 3,000 euros on an e-bike no longer. You're convincing them to spend 100 euros on a monthly basis, which is a much different type of sale or conversion you're doing.
Yeah,
it's easier to make, because especially when you can send it back after 6 months or 12 months, it's a much smaller commitment from a consumer to give for the same product and to get the product and potentially more services. So, but we also see and learned in the past, well, especially during COVID, this is a really difficult market. It's an important market because it's part of a bigger shift that is needed. It's like changing how we consume, the durables and how they are produced. So it's like the systemic change we're after with the technology. We can dive into that a bit later, but finance is such a big obstacle for companies to actually get it done that we also realized, okay, it's going to take at least 5 or 10 more years for financing instruments and other aspects of the supply chain to catch up to even be able to serve this model properly. And therefore, for us, as a result, it's there's not a huge opportunity to build in that market. There is an opportunity, but it's too small to build all the tech that needs to be there. So that's why we also work with companies like Bolt King and the consumable sector, because there's also a huge shift in like how we consume products there. That's better done on a recurring basis. It creates a stronger relationship. It creates better revenue for the brands. So we're like as a stepping stone towards that ultimate vision of, any product on any recurring basis.
And finance is less of an issue, I guess.
Much less, obviously, because you're, instead of providing a product that's normally 3,000 euros or 2,000 euros, it's the same product with a bit of discount. So, and it comes from the same stock. It comes, So there's a huge upside for brands to tie into this, and it still affects consumption in a very positive way, because you don't have to convince the customer constantly to come back and order with you, or then maybe lose a customer to another brand. You really invest this money into a good relationship, and therefore, customers stay for a long time, and that's really good for the business because you can spend more on optimizing your products or your supply chain. So it's like a...
Yeah, and I've been looking at e-bikes, for example, but they are more and more are like, well, we all know the Van Moof fiasco, where people had pre-ordered the bike and then it never came, and now there's a new owner, which is, of course, it's great that it still exists. But there's also other companies out there that you can order a bike, you have to pay like 3,000 euros or whatnot. Yeah. But then they're like, but then we'll make it for you. Yeah. And then I was also like it was new to me that this is like all of a sudden a thing where, to be able to offer those prices, they will let you pay, and then they will produce it. Where in the past they would have it in stock, which maybe also is due to financing complications, but also maybe is better for the environment, right? Where they...
Yeah, small batches, right? So if you produce bikes in small batches, they're going to be more expensive. So, the opportunity... So for sales, it's still like a question of optimization then for the bike manufacturers, if they're going to be successful selling a bike when you order it, because operating a whole supply chain to build a bike for just you, it needs to be designed in a way that it can be operated like that. I think for the bigger pool that will happen in this market, also for companies like ours that are trying to serve this, the technology to build those rental and product as service-based offerings, is when we're actually going to pay the true price for a product. Yeah. So right now, you're not paying the true price for your bike. Everything is subsidized. Those companies like Firmhouse and others, they actually make a loss in the beginning because the business model can only operate at scale. And not everybody is paid, equally in the supply chain. All the resources are not, equally gotten from the world, and from they typically come from lower wage countries, and that's still the case. But if that is changing, but the more and more it changes with like tariff imposements by governments, for example, on products that come from foreign companies, from countries, the prices will increase, and it becomes less attainable for people to get to buy an e-bike at that price, and therefore rental, product as a service, paying in installments will see probably a very big uptick. So that world is down the road, but it will take some time for companies to be able to do it. But like the pulling force that we see is when the true price becomes like you have to pay, 10K for a bike or 7K for a bike to get the same quality.
And this mostly because now they get the materials like below market value, below real market value.
Yeah, exactly. So, and I think that will change, especially with all the economic or the geopolitical changes that are coming.
Yeah, and road to Paris.
Yes,
things like that.
Environment. Yeah.
Right. Wow. So, you just said it's important, and I think that's also related to these topics. But I want to know, like, is that also why it motivates you to work on this day in? Like, is it what gets you out of bed?
Yeah, 100%. I think if I would just have like a goal, say like I want to build a 10 million euro business, or I want to get to 10 million ARR, and that would be my North Star. I know people get motivated by that, but I don't. Like it's really important because of the skill, but what's behind that? So if you don't hit that target, did you have fun along the way, and did you think you worked on something that was meaningful? Yeah. I think ultimately that's important when you are going to do something that's such a big challenge. Like the market is getting harder and harder to there's more capital to get started. Therefore, more people are starting a business, but it's also harder in the execution because there's much more noise in the market right now. So to really stand out, you have to give a lot into what you're building. So it better be something that you think is important, because the chances of failing are, just getting bigger and bigger.
Yeah.
So if you don't have that compass, so if you don't have that, I think that's important. So for me in my business, it's really when we did the innovation part. So when we helped entrepreneurs and brands, it was really to help them find this new thing that they're working on.
Yeah.
And now it's similar, but it's within commerce. It's like we're helping transitioning. We're shifting. Well, that's why we say it like we're shifting commerce for good.
Yeah.
So we're making an impact in commerce by changing how we consume, but primarily that starts with the brands by giving them the technology to change the ways in which they can offer their products.
Yeah, exactly.
So it still makes a huge impact. And we have a lot of brands that when I talk about them or when I see those entrepreneurs or those founders in podcasts, I'm like, whoa, it's really cool that they're a customer of ours. They're typically not the biggest, but they are the most impactful ones.
Yeah.
So Tiny Library for me is like one of our customers that we really like the most, that I personally like the most, let's put it this way. I mean, when we talk about technology companies, you talk about raising money to build software and to, do the marketing and to go to market. We just talked about rental being even more complex because you have to buy all the assets, you have to get the finance, and then you have to also do the whole operations. In the example of Tiny Library, they have to operate a warehouse, they have to operate return logistics, they have to operate the finance flows to actually finance all the assets. And then you have to do all the technical stuff because no system is already built for you. So still, even with our technology, they're building all kinds of connections to make it work in the way it should work. And I think this is where I like really admire those kind of founders. They have to break not through like one or two walls, but 10 or 20 to actually make that work.
Yeah. So can you? I think I understand.
Oh, yeah.
This is where I go. I'm not sure.
Yeah.
But can you highlight how you are different from a payment provider that allows for installments or like subscriptions? Because of course, like Stripe also facilitates subscriptions, right? Or because I think that's valuable for the listeners as well.
Mm-hmm.
I know a little bit about like in the past, you've also had some research into like how what's the credit score of someone, and can you highlight a little bit on that?
Yeah. So in any case, in like you're where, for example, if you build an online tool and you need to do billing, you're typically what we call solving a billing problem. You have some usage or you have some seat-based model or just a monthly fee for your software and it has to be charged. And Stripe and there's a bunch of tooling out there are great for it because it's built for that use case. But as soon as you put like a consumer into the mix, like they have a subscription with a brand like Bolt King or with Tiny Library, you have to do a lot of orchestration around like shipments, return shipments, managing subscriptions, having a really good storefront with like a good checkout and everything being very seamless the way as you would buy it at Coolblue, for example. And that spawns a lot more technical challenges inside the, you could say like shopping, like first time checkout to being a customer for 2 or 3 years where products constantly change within you and the company, between you and the company.
Yeah.
So there's many more steps along the way and therefore much more complexity. And we make sure that complexity is taken out and everything is more like orchestrated and you have the whole foundation to build up on with your brand. So it's like credit checks, for example, doing some fraud scoring, online identification. Everything that you currently see out there with Shopify is built for this one-time world. Like people come into your store, they put stuff in their basket, they buy and they pay. And it's good, and you ship your products, and hopefully nothing comes back. Our system is designed for stuff that comes back and orchestrating that whole flow, for example.
Yeah.
Our system is also designed to make sure that anybody who walks through your front door online can get checked. So you have like a background check, you have identification.
What is the main reason these companies use Firmhouse?
So for a big part of it, so that obviously is a big part of it, where that whole orchestration happens and everything works seamlessly. Yeah. It's also the online payment industry in Europe. When you cross a border from the Netherlands to Belgium, you have a different payment method that turns into like an online debit in a bank account. Yeah. So there's like a lot of complexity for localization in Europe that we solve for all these things. So it's like the payment methods, it's the checkout, it's a language, but also, online identification is different as well in those markets.
All right.
So that's what we deal with. Yeah. And then for the consumable market, because we're now talking a lot about rental and product as service, for companies like Bolt King and The Good Roll and other cool brands that we have on our platform, it's predominantly localization in those markets and dealing with it. So we offer them all the tools to have a really good customer relationship directly with their customers. But then dealing with all those little details that come from doing it in 6 markets in Europe or 10 markets in Europe, that's where we have done all the heavy lifting already.
Even if it's not returns, like I can imagine like with Bolt King, you might want to change your subscription and stuff like that.
Yeah, so that's all in our system.
Yeah. Right. Awesome. So you've been through a lot, and you've also seen your share of challenges.
Yeah.
I've been sometimes along there with you. So what's the like? Can you talk about a significant challenge that you've overcome and like how?
Yeah. So let me backtrack a bit. I think the main part of everything that we do is around relationships. So even the software that we're building, like it helps build a good relationship between customer and the brand that they're a customer from. And in turn, everything that we do is having a good relationship with the brands, having good partners involved to help the brands. And this is, for me, the key as well, that when we have challenges, we have quite a big network by now around us that helps us out. We have good investors, good shareholders, we have a really good team. So we can tap into everything that we've built around us in those years to really make sure that if you face an unexpected challenge, you can actually overcome it. So for me, that's the main thing. Any challenge you have, and I will give an example, but any challenge you have can be overcome when you have good relationships and good people around you. So for example, 2019 raised 600K just before COVID, started investing. Of course, your cost goes up, and then the growth was coming when COVID came. And then in that same month, everything stopped. For us, e-commerce was the main focus. So we just, stopped doing everything else that generated money for our company. So innovation, advice, paid projects, we stopped everything. So we killed that whole business under, of course, the 600K funding we raised. And then we just sailed into COVID. And we were focused on commerce. And commerce was like, oh no, the whole world's going to shit because we're not going to sell products. Who's going to buy products? We don't know how the economy is going to work. So it went from being completely stalled to all the stores are closing and e-commerce booming. So it went from we're not going to invest in anything to we don't have time to invest in anything because we don't know how to deliver all the products. So basically that added two or 2.5 years in terms of, when we could hit the targets that we had in mind with the 600K that we raised. But that's also 2 years additional runway you have to create. So with that, we know there was a lot of help from the government in the Netherlands, but when we had already the relationships, we could tap into it, equally as everybody could, but you still know exactly which doors to knock when to make sure that you get the help you needed because we needed it. And that really helped. I think ultimately Firmhouse is where we are today because of the fact that we back then already had the right people around us that could say, okay, we've been here before. This is how you navigate this.
Yeah, just track record and good relationships.
Yeah, exactly. And, those people are in networks as well that know which doors to knock for us. And I think that was really good. And those examples we have today as well, because we raised 1.4 million in 2023. Like we're on a growth trajectory, but we're behind. I mean, your ambition is, when we talk about setting goals, your ambitions are always higher than how you can hit them. So we had our phase of challenges this year as well. And then again, you can really see that the people that we have added in that round as investors, a lot of them come from backgrounds in payments world, from Argen. They also, like Argen, it is a massive success story, but obviously they had their challenges too.
Yeah.
And then you get the inside stories around, hey, how did they deal with, growth that didn't happen, or going into the wrong market, or going into the wrong direction and having to backpedal from that. And like, how do you deal with communicating that to your team, to the outside world? Like that's a lot of know-how that you don't really pick up from reading books or listening to podcasts, but really have to just go through. And then somebody who takes 10 minutes to just pick up the phone and say like, okay, if I listen to what you're saying, Bob, I think this and this and this should be your focus.
Yeah.
And of course you still take all the signals in and then you pick your own direction from all the signals you're getting. But the fact that you're getting those signals is really, that's invaluable.
Yeah. And then if you have good relations, you can call.
Yeah.
You can rely on their experience. Right?
Exactly. Yeah. So it always takes me back, like a lot of entrepreneurial wisdom comes from, or founders' wisdom comes from, how do you say, like, I hate the word spirituality, but going back to like truths that are in personal life as well, which could be, what I like is like the pyramid of Maslow is it's like you're born dependent, like on your parents, and then you think you're independent, and then when you grow fast enough and quick enough, at some point in your life you will discover everything depends on each other. and itself. And I think entrepreneurship is if you don't realize that, if you're building a company and you don't understand that there are so many people intertwined with your business, it's your team, it's your partners, it's your shareholders. It's stupid to think that you're independent because you're an entrepreneur. People become an entrepreneur to be independent, but you're not.
That's actually quite beautiful. Oh, so
you're interdependent, and the sooner you accept the fact that it's gonna be you're depending on others for making the results happen,
and also that
you do it in a good way,
perfectly okay to do.
It's all the success stories are there because they realized very early on that they are interdependent on others, and then used it.
Yeah, and maybe they're not. Oh, what's the word? Maybe you don't have like. Oh, maybe you are interdependent. Yeah. It's like. So you mentioned interdependence, and I just kept thinking, you don't depend on anyone per se, but you do depend on customers and so the freedom. You have the freedom to not pick up.
Well, you have the freedom to say no to stuff. And I think that's why a lot of people think they should become a founder or an entrepreneur. But then when it becomes tough, they realize, it's about your customer who sticks around, or when something goes wrong, who still believes in you. It's about your team. When you go through the tough times, it sticks around with you. It's with your investors when you will have a lot of tough times, right? When you raise money, because, your problems will only become bigger and bigger. They will never become smaller. And I think when you carry those problems, it's really important to very soon realize that you're smart. You can become a founder. You have certain skills, because otherwise you will not be doing that. Otherwise everybody will be a founder. But when you realize that you have, of course, freedom, but it comes at making a lot of trade-offs constantly. And the hardest trade-offs are around relationships and are around like, who do you involve with your business and how do you make those decisions and how do you decide who you go with?
Yeah.
I think that's 80 or 90% of my work is constantly figuring that out and maintaining that.
Awesome. Thanks.
Chair.
So what's next for Firmhouse? Like what's on the roadmap and what's the near term look like?
So 2024 was a bit of a challenging year, to be fair. So 2025 is the year in which we're going to get back on track with growth. It's a roadmap with what we're building. Luckily, the past couple of months where we've been we've readjusted our focus in our go-to-market. We've readjusted our focus in how we build and operate the team, especially on the commerce side.
Yep.
This is paying off a lot. So 2025 will be around picking up on growth again, onboarding more customers, and really being focused on, consumables as a segment, but also communicating really well in our marketing why it's important that, recurring or subscriptions become a part of, and it sounds really stupid, toilet paper or shaving blades, and why it matters, because there is a narrative to it that's true that we think that is important for brands to pick up on.
Yeah.
So those two things is where my focus is going to be. You're going to see a lot more on. And then we're growing a lot in the Shopify ecosystem. So a lot of our Q1 and Q2 product roadmap will be around more integrations with Shopify, deeper integration, and making sure that the brands that do work with us and are on Shopify can scale, to Germany, to other markets where they're currently not active.
Okay, awesome. All right. I think we've got most of it. If people want to look you up, where can they find you?
Internet.
Online. No. Yeah. Online.
Online. They can listen to this podcast. No, it's at LinkedIn, Bob Jansen, and obviously Firmhouse.com. Firmhouse.com for look at what we do and the product and which cool brands we work with and seeing the team. But LinkedIn, just connect on LinkedIn and
sounds good
from there.
All right. Thank you so much, Bob.
Thanks.